Derek Halpenny, European Head of Foreign Exchange at Bank of Tokyo-Mitsubishi UFJ, joins me now. Hi, Derek. China, GDP, that's the big figure of the day. Various takes on this, but the consensus seems to be we're now looking ahead to when China's going to withdraw the stimulus, and the question is, how's that going to affect the big scheme of things? What do you reckon?
Yeah, well, I think that's understandable. Certainly we had a good figure, and it looks like the authorities are on target for achieving 8% growth over the full year. To date, we have 7.7% real GDP growth. But it's the composition of that tells you, I think, that the need for addressing the current policy stance is quite important, and pretty much the lion's share of that entire growth is down to fixed asset investment, because the personal consumption growth was more or less offset by the net export decline. So ultimately it's very much domestic driven by policy in terms of increased lending and low rates. So I think going forward there needs to be quite a dramatic shift, and I think that is going to be the next phase in terms of what the Chinese authorities do.
And what about the next phase of currency policy for the Chinese authorities?
Well, I think, you know, the G-20 statement that we had recently is quite important, and I think over the next couple of years it's going to be the really main focus is going to be on the areas where we do have the global imbalance. We talk about a global imbalance, but about 75% of that is just China and other Asian countries. In fact, you know, all these people who talk about the need for euro-dollar to move higher to rectify the global imbalance, I think is nonsense, because if you look at, for example, over the last 4 quarters, the US is running a current account surplus with the Eurozone. And with other free-floating flexible currencies, we've seen a big adjustment take place. The deficit with Japan is down about 50%. In Canada, we've got the biggest surplus since data began in the 1960s. But the deficit with China has barely budged. So yes, I think G20 is going to be very much focused on getting China to shift its policy on currency, and I think they will be forthcoming with that.
I want to get your take on Mervyn King. I know he made the comments a day or so ago now, but people still talking about the comments in the article in the Herald about it'd be wise to take into account the prospect of higher rates. I mean, he wasn't telling us rates are going to be higher soon, was he?
No, but it's a shift, if you like, because you know, and the minutes as well didn't mention the fact that there could be need for expanding quantitative easing. So it does appear that those who are concerned about the impact of quantitative easing are now beginning to see the evidence that is convincing them that they could be on hold. So I think the markets have got it right for now in terms of buying sterling on the view that we're not going to get any change at the November meeting. But that doesn't mean that the UK economy is about to rebound strongly, and I'd still be concerned about sterling getting up to levels like 170.
Derek, thanks so much for joining us.